Hello, you're watching Out of Pocket, a show on how to strategies and ideas to overcome financial challenges for you. I'm Kevin Barnaby. Today's show is about share investing against gambling. A stock market or equity market is a public entity, which basically means a loose network of economic transactions, not a physical facility or discrete entity for the trading of company stock, shares, and derivatives at an agreed price. Now, these are securities listed on a stock exchange, as well as those only traded privately. Now, is investing in the stock market gambling? It's a question that gets asked from time to time. Now, when you buy a stock and it immediately goes down, it sure seems like gambling. Now, when you invest stocks, you're taking a risk of losing all your money if your prediction or expectation is not accurate. Now, ask anyone who has lost money in stock investments how they felt when the stock price kept falling. Losing your money can be devastating financially, mentally, and emotionally. So how can you differentiate if you are investing in shares or gambling to make your money? Retail investors in Malaysia make up to 20 to 30% of share investment in Malaysia's stock exchange, as presented in the month of July 2012 Bursa Malaysia trade statistics. Now, there seemed to be more selling volume from retail investors than buying of stocks for the last week, due to the negative sentiment of the economic situation like the Eurozone debt crisis, inflationary pressure, and slowing of economies generally around the world. Now, I'll be talking with two experts to find out solutions on how to deal with the guests' expectations.
Hi, this is two very important case studies I'd like to share with you, and hopefully to provide the solutions for the person involved as well as for the general public that are interested in investing in the stock market or already trading right now. So we have case number one, which is a person who have lost 100,000 in the stock market, and he was very devastated because of the greed in the stock market have actually put all the investment in one particular trade. So that's two very important lessons that we need to learn from this, right? And first of all is about it's important to educate yourself properly before you actually put your heavy investment into it. And if you were to learn it properly, then you realize that first you need to understand what kind of potential risk you are really getting yourself into. What can they do? I think the most important part right now is to really accept what has happened and to acknowledge, right? To acknowledge that you have actually made a mistakes, right? And to take this as a great lessons for the future on avoiding such mistakes in the future.
Welcome back to Out of Pocket, and of course our topic for today is share investing against gambling. Now, in the studio with me right now, two experts who have obviously got a lot of experience in dealing with shares and stocks. Sitting right next to me right now is Ms. Kathlyn Toh, who is the Director and Chief Trainer and Certified NLP Coach, and who happens to be a full-time investor in trading in U.S. markets. And sitting across from me is Mr. Lee Cheng Hui, who is the Vice President, Head of Retail Research, Equity Markets. I'd like to thank the two of you for taking the time to be with us right here on Out of Pocket. Thank you so much. Now, do you agree that, the stock market fluctuation, these days is caused by investor gambling and speculating the market based on rumors, and so-called noise?
I think it's been the case ever since the beginning of time.
Right.
But I think now there's less in terms of rumor as well as short-term fluctuation.
Right.
Because I think, first, I think people have wised up, maybe gone to Kathlyn.
There's some slight difference in terms of the market that I'm trading in US, because I focus on the top 500 stocks in US, right? It's called the S&P 500.
Right.
The market capitalization is very high. It's in billions of dollars. So it's not easy for individual to speculate and push the price up or down easily. So, however, the market is still volatile, mainly because there's a lot of uncertainty right now, right? I mean, the Europe crisis.
And of course, thank you for taking the time to be with us right here on Out of Pocket. Don't forget to catch us next Tuesday, 10 p.m. Out of Pocket, right here on CapitalTV.